Welcome back, Alpha Hunters. The markets are closed for the week of May the 19th. And you know what? I didn't make money this week, but I don't care. We at least got out of that stinking trading range that we were in for the previous couple of weeks. So let's dive right in, check out how things went this week. So starting out on Monday, slight little gap up from last week, sold down. It was really kind of just more of a sideways choppy day. It stayed in the range. That was kind of the main thing. It just kind of stayed in the range a little bit. Not really too much went on Monday. Tuesday, not much went on until the end of day, but we kind of just had another little choppy day. Not too much kind of going on there. Then the little sell down right here, kind of at the end of day, was kind of key. We have like a little shave bottom there. It was really kind of interesting. Like we sold all the way down right into the close. If you look at this on a daily time on Tuesday, there's like a 1 cent difference between the close and low. But if you look at intraday, that's actually a close and low of 110.25. So just kind of interesting there. But a lot of that was in anticipation of a meeting that was going to happen right after, or they were going to conclude a meeting right after Tuesday markets close about the debt ceiling in the US. And basically it came out like, they were kind of optimistic. They said they made some progress, that, hey, you know what? We're moving in the right direction. Okay. At least the market took that as a positive, gapped up very nicely on Wednesday, and then nice little pullback for the first 30 minutes. And then it finally took off, and it was bullish for pretty much the whole day. Nice little subtle pullback here in the afternoon, and then that was about it, kind of at the closure. But this actually got us out of the trading range. It kind of got us up there, and you're like, hey, kind of at the upper end of that trading range. All right, are we gonna take off here? Then we get to Thursday. Not really a big gap. Pushed up immediately. Took out the highs from April and February. In the first half of the day, we didn't get above them and hold quite yet. We came back down. We actually had a double top above some of those levels. You can see here the red box zone. I'll zoom out here to the daily a little bit later in the video, but we had a nice little pullback here, and then the last 2 hours was just a ripper. Just ripped right up. Got over 4,200 on the SPX. Very important number. Also on the ES futures as well. So we're not going to take a look at all that, but yeah, the line I did put on here has to go back from several months back. A lot of big time banker strategists said anything over 4,200 on the SPX should be sold. So we'll see. Not to say that was back like in December. This is back in March, April, February some. So there's a lot of different bankers saying anything over 4,200, just sell it. So a couple weeks ago, I did put this line on my chart. Actually, I had it a little bit lower, but once we got to this level, I actually was able to see where the SPX 4,200 level was. So I actually was able to adjust this line on my chart just so that I can know where the SPX is in relationship on the SPY chart. But then Friday, nice little gap up. We actually got above 4,200 on the open on Friday. And then kind of just hung out for about an hour, a little bit longer than an hour. And then Jerome Powell was actually speaking Friday morning. And whatever he said, the markets didn't like it. Got a nice little chop sell down here and then just chopped around for the rest of the day. We didn't really do too much after about that 45 minutes of selling after Jerome Powell kind of came out and talked. So that was your week in the stock market. Taking a look here at the Federal Reserve balance sheet data that comes out Thursday after the market close. A little bit of an uptick, went up about 1.5% week over week. Yeah, you know what? I don't know what to really say about this. I mean, they said they want to be shrinking the balance sheet. It's a little bit of an uptick, so we can see maybe if it comes back down here in the next like week or two, because that's not a huge uptick. And there was some regional banking issues here over the past couple of weeks. We do know about that. So it'd be interesting to see now. It seems like maybe some of that's a little bit behind us, see if that starts to taper back off here over the next couple of weeks. All right, taking a look here at the VIX. It has been not super bullish, I guess, for the stock market. Stock market bullish. I'm a bit bearish here for the VIX, like going in the downward direction. We just took out early May's high, and we didn't take out, on the VIX, we didn't take out the May low here. So just interesting relationship here. I just kind of wanted to call that out. We just took out that early May high on the SPY. We just kind of talked about that, and but we didn't take out this low. So just want you to be aware of that, and we'll see what happens. I was kind of looking for a close over 17 today, mostly because I want to see this weekly closure. We've actually had two weekly closures below 17 back in April, towards the mid-April and the end of April. And then the first week of May, we closed above it. The second week of May, last week, we closed basically right on it, but we still closed above it. This week we closed a little bit below it, nice little lower wick. So interesting, kind of where we are right now. But if we start to get back above it and close above it next week, I mean, I get the market's extremely bullish, and we're going to talk about that here a little bit later. But yeah, it's just the VIX is not playing like where you should be extremely bullish game, right? I mean, we're seeing even the VIX not partake in the directions the bulls are. The DXY, the dollar index. So last week, Thursday, Friday, we talked about it. We saw a strong move to end the week, Thursday and Friday, and didn't really know, kind of get into maybe a consolidation period and then push higher. We got into a little bit of a consolidation period. Monday, nice little pullback this week. Tuesday, a little bit of a doji lower hammer there. And then we just pushed higher Wednesday, Thursday. Thursday, very strong bullish day up, but did come into a pretty good resistance level back over here from mid-March. This is, the regional banking issue that was going on. So nice little pullback on Friday. We'll see maybe if it consolidates right here above the 100 on a daily time frame and then starts to push in the bullish direction again. But it's really kind of interesting because the dollar pushed up this week. The stock market did not push lower, right? And that's typically the relationship that we see with the SPY, the SP 500 and stocks, that if the dollar goes up, stock market typically has weaker time, goes down, goes bearish. If the dollar drops or has bearish movements, typically the stock market goes higher. So a little bit of non-correlation type action this week between the dollar and stocks. Continuing on with that theme of correlation not really meaning much this week, the 10-year yield pushed higher this week, and we saw stocks push higher this week. So another one kind of like the dollar pushing higher. And yeah, the stock market just didn't really care too much, I guess. So, but the 10-year yield is putting in a pretty nice base here, multi-month, basically from the middle of March all the way basically to the middle of May. Nice little base in here. Be curious to see really what happens. Like if this thing keeps pushing up, how's the stock market going to be reacting in that kind of situation? 10 and 2-year inversion kind of fell off this week, had a nice little drop, not going to continue higher. So this inverted head and shoulders action that played out kind of in April, not going to play out and go back towards the non-inverted area. So it's just going to probably just going to stay in this consolidation range. Maybe it breaks down a little bit. I can't imagine if it does break down, it's going to be a whole lot. So I'd imagine it just kind of stays in this consolidation range for at least the time being. The GLD, the ETF that tracks gold, definitely saw a nice breakdown this week on this guy as well. The dollar was strong. Gold, commodities should have been weak. So we definitely did see that. We saw a nice breakdown here on gold and saw a nice little retest today on dollar's weakness. We saw that retest today on gold right into this low. This was a great spot to probably just be trying to get bearish on gold. If you really wanted to try that, saw this breakdown, you're like, hey, you know what? Good spot. I dig it. Take a look here at HYG, the high yield corporate bonds. Man, we're going to take a look at the LQD next, but man, the bonds were not bullish this week. I mean, they haven't been bullish for several weeks, but they have definitely, as the market was breaking out higher this week, it's not like bonds were like, yeah, you know what? Party's good, bro. No, they were definitely, I don't know why I just brought in my inner California frat boy accent there, but regardless, we definitely did not see the HYG doing the best there. So not really much to say here on the HYG, just other than the fact that it's not really being supportive of the stock market going higher. And to be perfectly honest, it hasn't even gotten back even close to those February highs, and we just saw the stock market break above those February highs. So basically, you still need to be cautious out there. Make sure you're using your stops. If you are riding the hype train on AI and all that, make sure you're using stops. Have protection out there, all that kind of stuff. Taking a look here at the LQD. So we saw some really good action on the LQD this week. And very much has not taken out the February highs, right? But the breakdown that we saw on the LQD this week was just weakness every day. And we had been watching this nice little support area right here around 107.60 60 or so. And when we broke that this week, Tuesday, Wednesday, Thursday, Friday, well, look at the volume that came in. It's a breakdown, breakout, however you want to call it, but increasing volume. So we'll see how this plays out here going forward. But yeah, I mean, not really looking the best on the bond side, as they're not really being supportive of the market rally that's coming in. It seems like it's a lot of, hype, FOMO, whatever you want to call it. I would just be very cautious because the bond side, the HYG and the LQD, not really buying into it. And if you're one that tracks more of the TLT, well, I mean, here you go. The same kind of picture, even forming up here. Nice little breakdown this week, not getting back and taking out those Feb highs. Really, even you could say the December highs is really the high of this consolidation area. So it's going to be really interesting. It's going to kind of low back down to, some of these lows it had back in March and December. So if it starts to break some of these, I mean, the bonds are going to tell you, hey, we got some issues. And the equity guys, they might flood out really quick. So make sure you have your alerts at least set, stop losses maybe even set, because if the market turns, the market might turn really rapidly. All right, taking a look here at the Fed rate watch tool. For June, we can see that week over week, not much change, but the past 2 weeks, during the week, we have seen kind of some pretty crazy volatility around how much these odds have changed between a hold in June and a rate hike in June. Last week on Wednesday, after we got FOMC and CPI, we were down at 0% for a rate hike in June. And then we went all the way to this week up to the mid 30s, 35 you see yesterday. And then Friday we came back down and ended at 18.6. So, and that's for a rate hike. And, it is crazy some of the moves that we see out here on some of the future odds for some of this rate hike. And this is for something that we're getting in a month. So it's been interesting watching this every day because it's been moving pretty good. But, as we go throughout the months, we're seeing a little bit better clarity as you go farther out. Obviously, we're seeing a little bit higher rate hikes, at least a hold here for July. September, we're seeing, a little bit more of a higher rate as well, possibly a hold there for September, a little bit more of the odds there. And then for November, we're seeing a little bit more of maybe the first cut that we get in November. So we'll see kind of how that goes. It looks like maybe 1 cut or 2 cuts by November, but the greater odds are, possibly that would be the first cut. Now, this is a little bit different from a few weeks back where July was going to be like the first cut. So it's just kind of interesting to see how much the outer months have changed, but the stock market's not really caring to factor that in too much. And then you can see here in December, we have our second cut, possibly in December, down to 40% chance for the second cut. So currently it looks like no rate hikes or rate cuts June, July, September, and then a rate cut of a quarter point in November and a quarter point then in December. All right, taking a look here at the week over week options change. And obviously we just got rid of a huge monthly expiration. May is gone. And we have 3 weeks until we get to the June monthly expirations. That is currently the big one out there. Now, if you remember the last time we had a monthly expiration back in April, May and June were quite a bit higher, almost kind of in line with each other compared to how we have it now in May, where you got June and July. Well, July, there hasn't really, they just recently started building positions in July, and you see a lot of puts here. So I would imagine there's going to start to be more July positions be picked up, but we'll see kind of how this develops. Is July going to start to be as large as June? I don't know. Because it should have, June was already way larger or much larger positions than July is by this time. So we'll see. But June, end of June, obviously a lot of puts there. A lot of calls coming through on the 16th of June. Didn't overtake the put buyers this week, but there is a lot of call buying out there for the June 16th expiration. But even though the market was breaking out higher, we did see quite a bit of put buying going out through most of the expirations. And if you look here on the short term, next week saw a lot of put buying. The week after, June the 2nd, a lot of put buying. Now, I can't think of a catalyst that would be big enough to justify going out there and buying that many puts for June the 2nd. Oh yeah, the US debt ceiling. Oh yeah, if they don't pass that, I wonder what the market does. So there was probably some people out there buying some lottery tickets. I would imagine they're probably like really cheap, really far out of the money puts. And that's probably just playing with some of the numbers, but they're probably just out there buying lottery tickets. And taking a look here at kind of the structure of the June 16th expiration for the SPY, you can see we have quite a bit of puts out here at the 400, and we also have quite a bit of puts out here. What is the 390? 390 is 178,000 puts out there. So we still have a lot of puts out there. And then to the upside, there's a lot of calls out here around the 420. So it's going to be interesting to see kind of how the market moves here over the next 3 to 4 weeks, as you know, there's not many puts right above our current level. There's really not. It's just all calls. So there's a lot of room to kind of get in here and just chop around and just kind of make everybody confused here over the next couple of weeks. And you know, the market just kind of, hey, we're going to look at everybody's options positions to collect a whole bunch of premium. So I don't know who is out here buying all these calls, but these guys not even going to come close to making any kind of money. So I briefly want to just kind of go over AI and the opportunities and the hype that is surrounding AI currently. I don't think anybody doubts AI is going to have a big impact on society, workplace, productivity, and that kind of stuff. But we still just can't blindly go chase the latest and greatest carrot, okay? We got to do our due diligence and make sure we're doing what's right. You know, there's no problem being patient if you don't like the opportunity, but there is no problem in chasing some of the opportunities that some of these stocks are just riding a great train. Okay. There's nothing wrong with that. If you do it though, just use a stop loss. It's not difficult. There's nothing wrong with, you know, riding the gravy train. But just use a stop loss at whatever levels you need to. Following it on the daily as can. Like I like doing that, honestly. And I have done it before. It works really well. But I think the most important thing is understanding the areas where AI is going to be most impactful to making money now and down the line. Okay. AI, to me, the companies that are developing AI are probably not going to be as profitable as a lot of people think they are going to be. Okay. So if you're looking at Alphabet here, a lot of people thinking, oh man, they got this Bard thing. You know, they did their IO conference last week and they came out with a lot of great productivity changes and stuff like that, better enhancements or whatever. One of the big issues with Alphabet is they're a big company and it takes a little bit of time, right, to kind of get things approved and up to speed and, you know, out into, you know, the working production, right? The benefits of small companies is they don't really have those bureaucratic layers. You know, they can get things out there a lot quicker. And for me, I don't like the idea of Alphabet here, okay? And a big reason why I don't want to chase the Bard hype. I don't think that there really is a productivity and a real earnings hype here. To me, it's an AI hype. I get that, but I don't see how Alphabet is going to benefit in the bottom line here on the relatively shorter term, right? There's a big ocean out there to go get the market share for AI and productivity from AI, and I understand that. But with a lot of the productivity tools and stuff like that they announced last week with Bard, why weren't they announcing this stuff and doing this stuff over the previous 2 months when they had their debacle back in February, right? It's like, why did you wait for a big conference? Like nobody cares. Like you got to get out there and get it into the marketplace. You got to continue to take the market share that is there for people that want to use AI. And for a lot of people to kind of just think that AI, oh yeah, you do AI, you're just going to make gobs of money. Man, it sounds so much like the 90s when, oh man, you got a website, you're just going to make so much money. It's like, that's just not how it works, right? I mean, there's a lot of people out there that had websites in the 90s, but they want, you know, the dot-com bubble, right? There's a reason why it was called the dot-com bubble. But, you know, if you look at Google, they make money from search. They don't make money from AI. Not saying that they won't, right? Down the line, they won't, but they got to go get the market share now. And that's the problem here with Alphabet. And if you look at one of their execs kind of mentioned here, and this is a couple months ago, I'm even referencing it in an article a couple months ago, that AI is expensive. It's 10 times more costly than just a search query. I mean, this is hugely expensive. And guess what? They're not monetizing AI. Okay. So we still are going to see this play out. And I don't think you have to go rush in and go chase the gravy train. Like, I understand that there's going to be great opportunities out there in AI. I don't think the companies that are actually developing AI, that is the opportunity currently. I think there'll be opportunities in that area down the line. I don't think it's currently right now. It's there. If you look at a company like Nvidia has been on one heck of a run this year, and really ever since ChatGPT kind of started coming out and gaining ground and popularity, we have seen Nvidia really explode on the AI hype. But just kind of zooming out here, just kind of getting perspective of where we are on the stock price and just how much of a valuation that they are now put under, and they have earnings this next week. So we're going to find out, are they going to be able to live up to the hype of the valuation that has been bestowed upon them? So we're going to find out pretty quick on NVIDIA, but semiconductors is probably going to be a pretty safe bet if you want to be involved in the AI hype. And I'm not saying you got to do NVIDIA. You also got AMD out there and some other semiconductors, but there are going to be opportunities in the AI area. And I just don't think it's going to be the companies that are actually developing AI currently. I think it's going to be the hardware, because there's going to have to be a lot of infrastructure built out for AI to really be effective, right? And then if there are reports coming out about companies that are utilizing AI, or they're starting to utilize AI in their workplace to shrink their workforce and stuff like that, like IBM has said here recently, that might be a pretty good area to go invest, right? Companies that are utilizing AI, but they're not having to really pay for it, sounds pretty good to possibly be investing in, right? Because they're going to be increasing their earnings and probably not even paying too much for it. So these are the kind of companies I'm really kind of more looking for. I'm looking for like hardwares on discount. I'm looking for hardware, and then companies that are utilizing AI, but hopefully utilizing it in a pretty effective manner to hopefully increase earnings on the bottom line. But just chasing AI, to me, not really the best way to go about it. And I got two last articles here. Hedge fund billionaire Steve Cohn tells investors to ride the big wave of artificial intelligence and stop focusing on recession odds. Like, I get that. Understandable. Well, here's another article. Big name investors are going all in on AI. Some of the best known names in investing are betting big on artificial intelligence stocks. Bill Ackman, Stanley Druckenmiller, Chase Coleman, Paul Tudor. So we are seeing a lot of people invest into these areas. Kathy Wood, even if you're a fan of Kathy Wood. I'm not the biggest fan on Kathy Wood, but they're all bullish on AI. And I get that. And what have we seen here over the past couple of months? We've seen AI stocks and stocks in the AI area really, really run up. And the thing that I'm trying to kind of convey here is, if all of these guys have bought in already and you start to buy in, what are you buying? Like, who's going to push it up next? So this is something that I think, take your time. Take your time before you go jumping into some of these AI stocks. Give it some time. Let there be a shakeout. Let there, kind of be some settle. It might take some months, but you don't need to be chasing. Not with all this money that has already flowed in and pushed these stocks up. You can wait. You can wait. All right, taking a look here at the RSP, the equal weight SP 500. And nice little sell down, nice little shaved bottom on Tuesday, kind of like the SP 500. Wednesday, Thursday rallied up, and Thursday was actually a very strong day for the S&P 500. And then Friday, a nice little sell down. Still can just be consolidating here. We'll see which way this kind of breaks. It might pop bullish. We do have a longer term trend line kind of coming down that it did pop up over in the beginning of February, but came back below it. So we'll see kind of what happens here over the next week. But if it does get below these levels at around 140, I mean, it's going to be running down to 137.50 and probably just going to be going lower. The DIA, the ETF that tracks the Dow Jones, not really too much going on here that's too indifferent from the RSP. It's more of a hangout type action that's kind of going on here, so be kind of interesting. I mean, we are getting into a pretty long consolidation in this area, and I can kind of see it go either way here, because we do possibly have like a little inverted head and shoulders maybe setting up here with this low that we put in back in March. Be kind of interesting to see which way this goes. But if we start to roll back lower, I mean, we're going to start to see other things break in the market and probably just pick up steam. So give it some time here on the DIA. Let it really tell you which way it's going to go, and then play it that way. Take a look here at the IWM. IWM was moving this week. Wednesday, this thing was up 2.23%. It had a bullish day. Very interesting move this week. Still didn't really get above this level. Needs to get above this level and then maybe come back and retest it. And it might be one where it flicks up, fills this gap right here back from March 9th to 10th, and then maybe starts to roll back lower. Be kind of interesting, or maybe just kind of chop sideways. But be curious to see which way this thing eventually breaks. Everybody's favorite, the Qs. Well, yeah, everybody's favorite because, well, it's just been an absolute monster. We took out August highs on Thursday. Yeah, not really much else to say there. I mean, look at the candle. Look at the move it put in on Thursday to do that. 1.86% up. And this is already when it was hugely extended. And we had a kind of, nice little upper wedge coming through here. And yeah, it got tight and it popped right up through it. Be curious to see what happens here over the next couple of weeks. And I'm going to get into the SPY here in just a second. But, if we do make a run up to like 350 or so, we do have a little bit of an open gap there. And then we have another one up at around 360. Back from last April. So it'd be interesting to see if the Qs make that run. Alrighty, the SPY back here. Let's just figure this out. Well, we definitely saw the move to break these highs back from, well, May the 1st. I think earlier I said April, but May the 1st and February 2nd. So yeah, we definitely got above some of those highs. We did not fill this gap though back from August of last year, August 22nd. And this was a weekend gap. This was over a weekend. So I kind of could see us go a little bit more bullish. Obviously, break out, and we did hold above the wick. But if it made a run up to about 422, that would basically fill this gap. I know other people like to think that this is a gap as well. It depends on how you kind of define gaps. So if it comes actually all the way up to like 426, maybe it fills these two gaps from like August 18th, 19th, and 22nd of last year, possibly. What I'm going to be watching though is this. If we basically, since we closed where we closed, we didn't close over 4,200. What I'm going to be looking for is a push higher. If we push higher, we fill this at 422, and we kind of hang out for a couple days, and then we come back down by the end of next week. That is what I'm going to be looking for. Now, I know this is not exactly like time specific, but by the end of next week, I want to see if we get back below these kind of highs. And if we do that, do we run and come all the way down and get below the lows of this week? And the reason why I say that is because this would be a move where we go up, we fill that gap at 422, and then the market doesn't hold. It's going to be a false breakout on 2 weekly candles, and then we would have a bearish engulfing weekly candle. I'm not going to say that that's going to work out. I'm just saying I'm going to be curious to see if this kind of happens, because with the way that we have the current price action between Wednesday, Thursday, even Friday, it seems like we'll probably just go higher next week. Just going to go higher. But it's not one that I'm like, yes, I totally want to buy into the hype that we see right now and the extension that we obviously see right now on a lot of the tech stocks, even because these tech stocks are so far extended. Like, what are you buying into? What are you buying into? Like they could turn any second, and like there's nothing that's going to help hold you up and push you higher. So this price action will be something I'll be very interested in seeing this next week. And we're supposed to have the debt ceiling kind of negotiated and done sometime by next Wednesday, Thursday, something like that, I guess. So be curious to see if they actually get that done. And if they do get that done, I could see the market pop off it initially and probably just sell it off like a sell the news type event, buy the rumor, sell the news type of event. So if that does happen, I could see the market kind of roll over. But I could also see the market start to roll over if they don't make a debt ceiling deal and the market really starts to panic and freak out and say, okay, we got to go protect some capital, and we see a little bit of a hiccup in the market. So it'd be kind of curious to see which way that kind of goes. But yeah, I'll be really curious to see if we do push up Monday, go fill this gap here at 422, and then maybe even hang out there for Tuesday, and then start to roll back over Wednesday, Thursday, and Friday. So anyways, that'll at least be what I'm going to be watching this next week, along with some of the bonds and dollars, see if they continue to move in the directions that they are moving. Because man, if dollar continues to push bullish and we still see bonds continue to sell off, like the stock market will get wrecked eventually. It's just going to be a matter of time of when. So Alpha Hunters, have a great weekend. Take care and talk to y'all next week. Alrighty, take care, Alpha Hunters.